In this video, guys, I'm going to have a quick guide to spread betting. What is spread betting? Stick around. Hey traders, a warm welcome to you. Alright, so what is spread betting? Let's have a quick guide, let's run through it. So if you're not familiar with what spread betting is, not sure what it is, stick around because I'm going to run through exactly what it is and what the pros and cons of spread betting are. Okay, so let's go. So spread betting allows you to speculate or bet on the direction of a financial market. So for example, we have indices. You might be familiar with the FTSE 100. You might be familiar with the Dow Jones, the Dow 30. You might be familiar with the DAX, which is the German 30, German equivalent of the FTSE basically. All these indices around the world you can trade on. So you can bet on the direction. So if you think, right, I think the FTSE is going to continue to go higher, you can place that bet. We'll have a look in a moment at how you do that and how it will work. So indices are a big one, super popular with spread bettors. We've got things like commodities as well. The price of oil, the price of gold, the price of silver, copper, corn, soybeans, you name it, a massive amount of things. Then we can move on to things like cryptocurrencies. Many spread betting firms offer cryptocurrencies so you can speculate on the price of a crypto. So you've heard about Bitcoin, you've heard about probably Ripple, all these other things, Ethereum. A lot of spread betting companies will offer a variety of cryptocurrencies. Exactly the same thing. You think it's going down, you can bet on it going down, and we'll look at going short, what it's called in a moment. Same with anything, you can speculate on the direction. Then we've got things like Forex, super popular as well with spread betting, spread bettors, should I say, speculate on the price of an exchange rate. So pound against dollar, GBP USD as we say, Euro USD, so that's Euro against the dollar, anything, yen, Swiss franc, you name it, it's there, it's available for you to speculate on the direction of. And then things like shares or stocks and shares, stocks if you're in the US, like Apple, Facebook, stuff you're familiar with. In the UK, things again you're familiar with in the UK, JD Sports, Sports Direct, any of the brands, Marks and Spencer's, anything that's available, a company in the UK is listed, if it's available on the spread betting platform, you can speculate on the direction of it. So massive amounts of markets, guys, huge opportunity for you to take a position and potentially profit from being right in the direction of any of those instruments that you like. Okay, so how does it all work? So one thing to note, guys, is that you don't actually own it. So you don't own the underlying asset. Unlike if you were to buy a share, we have theoretically a share certificate or certificate, a piece of that company, you don't own it. This is purely a bet between you and the spread betting firm saying, hey, I would think that this price is going higher, and it's literally packaged as a bet. And it's an agreement, it's a little mini contract, if you like, that says, hey, I think it's going higher and I want you to pay me if I'm right, and I'll pay you if I'm wrong. Simple as that. So you don't own the underlying asset. It's purely a bet on the direction. Is it going up? Is it going down? And the way it works, which we'll look at in a moment, is it's priced in pounds per point. Huh? What's pounds per point? So maybe you're used to betting on a traditional market like the football, the rugby, horse racing, etc. You go in, you place your bet. If that market wins, if the team wins, or if whatever happens, you get X goals or whatever you're predicting gets right, you get a return back on your money. Spread betting is a little bit different. Now, spread betting's also been around in sports and stuff, but today we're talking about financials. The more right you are, the more money you make because it's priced in pounds per point. So, for example, let's just for ease of example here, we go that you're betting £1 a point on the FTSE going higher, and that's called going long. If we were to sell £1 a point, that would be called going short. So going short is betting on the direction of the market going lower, going long is betting on the direction of the market going higher. Up bet, down bet, buying, selling, similar things. So let's say you have an up bet, we open an up bet, we think the FTSE is going higher over the next couple of days, and we want to place a bet on that. So we could do £1 a point. So the FTSE will be sitting there, be quoted at something like 7,500, 7,501, whatever the price of the instrument is you're trading at the time. So you would buy, you would place an up bet at £1 a point at 7,001, and that means for every 1 point the FTSE moves higher, you make £1 because you've got £1 a point bet on. If you have £10, you make £10. You have £100, £100, etc. However, for every point it moves lower, i.e. for every point you're wrong, you're going to lose £1. Now, of course, it could go long, it could go wrong for a while, maybe move down a bit, then go back up. It's when you close it. It's the difference between the opening price and the closing price that matters. So you could find it goes back 5 points, you're down £5, and then it goes up 50 points from there. So you're going to be back up, you're going to make that 45 from the entry point. It's the entry point and the close price that actually matters. So look at an example. So you bought this FTSE a pound a point at 7,501. And let's say next day, the price is currently sitting at 7,521. So you've technically made 20 points on that trade because you were buying at 7,501, 7,521, you made 20 points. What was your stake in pounds per point? In this example, it was 1. So you've made 20 points, great, times by your stake, £1, you've made £20 on that trade. If the stake was higher, you just do the equivalent maths with it. Then, of course, it doesn't always work that way. Sometimes you might have a trade that goes against you. Let's say it goes down, it's sitting at 7,495, so it's 6 points down from where you bought it. You've lost 6 points. You were £1 a point, that was your stake. So you're timesing 6 by 1, £6. Unfortunately, you've lost £6 on that particular trade. So you can see the amount you win or lose is dependent on the movement of the price of the asset that you're betting on and your stake. You could make £100 just by doing £100 a point on 1 point, or you could have £1 a point and have it move 100 points. So you can see those are the two levers, if you like, that get adjusted. Now you've got control over the your position size. You can trade as big or as small as you like, having your comfort zone, whatever suits you, depending on how much you've got into your account, how much you're prepared to risk and all that kind of stuff. So you can adjust your position size to suit your tolerance for risk, your goals, all this kind of stuff. And you can trade on any time frame you like as well. So you could trade, like an example, we just had a day, you could trade for an hour, you could trade for a minute, you could trade for weeks, you could trade for months. It's all exactly the same. A fundamental formula in maths is it's what the price you close the spread bet at and the price you opened it at, the difference, whether you're going long, whether you're going short, and your pounds per point, i.e. your stake. So very simple once you kind of understand what's going on. So what are the things? So let's just talk through these bets, guys. A long is an up bet, so you want the price to go higher. So very simple, it's just kind of trading terminology. Is going long means you want the price to go higher. You place an up bet on, you've bought. And short is a down bet. In other words, you sold and you want the market to go lower. So you want this, basically, you want the price to go lower and lower and lower. So you want the price to be lower than what you sold it at. Some other things to point out over here, guys, is the tax advantages. There's no capital gains tax to pay when you are spread betting. It is within a betting wrapper, and the legislation at the moment, and go and check it out as well, depending on when you're watching this video, and tax laws change and all that kind of stuff, and some people's circumstances might be very unusual, but generally speaking, broadly speaking, no tax to pay on a spread bet, which is a good reason to do it. You can go long or short. Like I say, you can bet on an up movement or a down movement in multiple markets, loads of markets, guys. You can have whatever you want, currencies, cryptos, shares, the lot. You know, it's massive opportunity out there. And the leverage. So because you're betting pounds per point, effectively you're controlling quite a large amount of money. We call that the notional value. You don't have to worry about that too much, but effectively what it means is that you could only have to put up a small percentage of the position value. So you're basically betting on the movement with what money you have in your account. So you're allowed to kind of leverage yourself up and bet accordingly, which means you haven't got to, for example, if you were buying shares in Apple, you have to pay the whole amount, however much that is per share, times how many shares, you'd have to give that over. But if you wanted to have a short-term speculation on the price of Apple going higher, you wouldn't have to put that whole amount up. There'd be a certain percentage you'd have to have in your account to cover that position because you're short-term trading it, just to cover the loss that potentially could happen. And then obviously if you make a gain, that's going to be credited to your account. So that's a very powerful way of doing it. So is spread betting right for you? It could be. It depends on your circumstances. Guys, all these things, leverage trading, is risky. If in doubt, you know, make sure you're consulting a financial advisor and all that kind of stuff. I've got a disclaimer at the end of the video. Please check it out. Link in the description below if you want to find out more information. Click that. Off you go. Go and check that out. But depending on what you're doing, depending on your risk tolerance, depending on your current finances, depending on you understand the whole thing, then it might be something for you to look at and consider. As long as you're accepting all the risk, you know how it works, It's a very, very popular thing, guys. Loads and loads of people are doing it, and it's something that people have been doing. I've been doing it first. I think my first spread bet was in 2001, and that was when it's much more expensive to trade. It's much different. I remember typing on like instant messages and stuff, whereas now instant, you've got platforms on your phone, you've got platforms on your desktop. Very simple, very easy to trade. It can be something that's quite lucrative if you get it right. All right, guys, take care, and I'll see you in the next one. If you like this kind of stuff, then consider subscribing to the channel. Bye-bye.